I'm live, dog. Hello, guys. Yeah. Olè máa ṣe nǹkan tó ṣe kókó kan lórí ẹ̀ díẹ̀. No, ẹsẹ̀ ló ń ṣe. Ẹsẹ̀ ló ń ṣe sọ. Àbí ṣàbí o. If you're here, kindly identify yourself, like who and who is here. Drop a comment. Let me know who and who is here, so we could. So let's wait now. Let's wait till we have enough people here before we start. Okay. Ballo music. Okay, nice to have you here, Ballo music. Let's wait to have at least 10 people here before we start, because I don't want people to miss. I don't want people to miss this. So, because when I start, I'm not going to be going back again. So let's wait to have enough people here. Nice to have you here, Ballo. Kindly identify yourself when you join us. Okay, Farouk, how are you doing, Farouk? So yesterday I said we were going to be talking about what today? I said we were going to be talking about um was it risk management, or what did I even say we were going to be talking about? Was it risk management that I said we were going to be talking about today? Okay. Once we get to 10, we'll start. We have 6 people here waiting for 4 more people before we start. Okay. So today our topic is going to be premium and discount. That's what we are going to talk about. How I use my FIB, and how you can also use FIB, and the situation that I use FIBA. So it's going to be premium and discount, and risk management. So we are going to talk about these two today: premium, discount, and risk management. Samuel, how are you doing? Hi, Samuel. Nice to have you here. So premium and discount. That's what we are going to be talking about today: premium and discount. How many of how many of you have seen the pre-market analysis? Noddy Drill. Hi at Noddy Drill. How many of you have seen the pre-market analysis? Idris Kudirat, how are you doing? You doing good? So let's get the lecture started. Let's get evening. No, you guys should go and watch the pre-market analysis after this class. So it's an insight on what price is going to be doing next week, and we'll see. So we're going to be talking about premium and discount. So let's say we're in an uptrend, right? Price is in an uptrend right now. We have higher high, higher low, higher high. Market came back. Market was going uptrend, and all of a sudden we took out this in a previous high that was here, right? And market change structure. Then we are in a state where we want to continue selling to the downside, right? So the way I mark out, so the rule for trading is that whenever market has, if market is expanding, it will expand and reach a place, but price needs to be delivered for, price needs to be delivered equally at every price point. You get? So if price needs to be delivered equally at any price point. So if the market accelerates towards that point, the market must come back. Yeah, yeah, you can record. You can record it. Market must come back to that particular area to give you a balanced price. So this high right here, let's say this is the previous high. Let me let's say this is the previous high right here. The price took out, the market took out on this previous high right here, right? You don't even need to record it. You can always come back and watch the live because it will save on YouTube. So you don't need to go to the stress of recording it. You can always come back and watch it. So once price take out this high now. So how I use my fib is like I mark out the low, the recent low of the expansion and the highest point it got to before we had a market structure shift. Remember, we need to have a market structure shift before we start looking to sell. If you're in an uptrend, we need to have a market structure shift before we start looking to sell. Do you understand? If you're in a downtrend also, we need to have a market structure shift before we start looking what's going on here. I think they have. I don't understand again. No. Okay. That was okay. So if we are in an uptrend, if you're in an uptrend, you need to see a market structure shift. And the market structure shift is just the first stage of character in the market. The rule for an uptrend is that if market is going up, the highest low must be protected. Price must not violate that higher low. So anytime we have a violation of that higher low, it means the market is about to change structure. So that's a market structure shift. So and mostly if let's say we take out a previous high, the only time I trade counter trend on a trend is that I'll wait for it to take out a previous high and I'll have a market structure shift. Once I have a market structure shift, I know that price is retracing back into discount. So this area right here, this up area, anything above how do I explain it? Because this is how I use it, but let me explain it the way a baby will understand. Let me set this thing back. Let me set these settings to the way it will show very well so that everybody here can understand. So where are the colors, the background colors? Okay, so you can see the way I have it marked out, right? So this top right here, if we're in an uptrend, this top right here is premium. And if we're in a downtrend, this top, if you're an uptrend, this top right here is premium and this is discount. And if we're in a downtrend also is the same thing. So premium and discount, you need to understand the relationship of premium and discount in prices. So if you have an expansion to the upside, you need to know that price will come back to discount to give equal price and equal opportunity to everybody that is buying and selling. So if you're in an uptrend and you have an expansion, let's say you have a week where you have an expansion, market is due for a retracement. You need to know when market is due for a retracement. And usually most of the time, if we are in an uptrend, let's say we are heading towards a place. Once we take that high, the market will retrace to give balanced price action. So anything above 0.5% is premium. So we are going up right now. Anything above here is premium, and anything below here is discount. So this price right here is overbought. We need to sell it back to buyers that are here so that they can also have opportunity to buy it. Are you guys understanding, or I'm not making sense? If I'm not making sense, let me know so I can speak to you the way you understand. Okay, good. So this is the relationship of premium and discount. So now this is just the sample. Let's get to read chart so that you guys can say it. Explaining it on the chart is going to be very, very I think UJ is the pair that does that a lot. Okay, yeah, this is it right here. Dembele, Sheki, Dembele, Sheki, Dembele, Dembele. So let's start from this particular price action right here. So you see from this low right here, from this low right here, this was the recent high, the highest high in the market right here. This high right here was the highest high in the market. So from this low right here, the market was in an uptrend. It was going, it was just like accelerating uptrend, and you can see it was respecting all these lows, these higher lows. It was respecting them, respecting till it came and took out this particular high in the market. Till it came and took out this particular high. So from this low right here till it took this high, this is what an expansion looks like in the market. Market was just accelerating, going and targeting the orders that are here. So after it took this high right now, there are orders that are not filled. There's still liquidity inside this range right now. So price needs to come back and fill that gap along the line. So what I do normally, if I want to determine a discount price, I'll just use my fib, mark out the recent low of the market that started the acceleration, mark it out with the high that it took. You can see this is the high that it took. Now I have, if this is where I'll start selling from, any sell setup that I see inside this premium price, I will say once I have a market structure shift, which is this, any sell setup that I see inside the premium price is a good setup, is an A plus setup, because I know that the market is retracing back into a discount area. So I'll start selling from here till we get here. What trade view are you using? Till we get here, I will be selling from this high right here till we get here. I will be selling from it. And once we get here, I will look for a market structure shift back, because I know price is done retracing. This is the discount price area and this is the premium price area. So market is balancing price now. Now we are going up. And this is that's the exact same thing that we used in trading GBP USD for the since like January. I've been shorting GBP USD, even though GBP USD is generally a bullish trend. I've been shorting it because I know price expanded. And after that expansion, after we took out this high right here, now there's no way for market to go again. Market needs to come and take out all this low right here and clear and fill all the orders before it start going up. And that was the reason why I was selling this pair, knowing in my mind that this pair is going into a premium, a discount price. And look at what happened. Now we got to a discount price right here. We had a market structure shift after that discount. This is the reason why we've changed back to bullish, because overall the trend is bullish on this particular pair, but because we are retracing back, that was the reason why we were selling. Now the price has balanced this price action, then we'll start looking for a market structure shift, and this is our first market structure shift in the market. Then we'll start buying again. Is that understood? Before we proceed, ask your question so I can answer your question. Ask your question so I can answer your question. So this is how I use premium and discount in the market to actually know the direction of the market, the direction that the market is going to. So I wouldn't just be like, okay, I'm just buying and I'm just in it because market is in an uptrend now, so I'm just buying. No, even if the market is bullish overall, there's a reason why the market moves in a zigzag way. The market goes up, goes down, goes up, goes down. There's the reason for that. So you need to also know that reason in the market, that the market is going up. Once it take out this particular high, now it is due for retracement. It's going to come back, retrace, and balance price action before it start going up again. Is it understood? Before I get to risk management approach to passing a prop firm, I think that was the reason why I'm doing this stream. Like for the people that trade prop firm here, I'm going to break down how I trade my prop firm for me to be able to pass it, the approach that I have towards prop firm. No, boss. Tunde, what don't you understand? What exactly don't you understand? Okay, Sam, clear, clear, clear. Okay. What did you look at for before you sell? I have, please, I just come now explain it. So Tunde, this live is being recorded on YouTube. So like you can always come back after the live is closed, to upload on YouTube. So you can always come back to it and see what you missed. But with the ones that you get here, try to make sure you follow along. So what do you look at before you sell? I always have a high in mind, like the most recent high. I look for a liquidity sweep on the most recent high. So the liquidity sweep is that this is the like a protected high, and this high has been respected for a very long time. So when market takes out that liquidity, after taking out that liquidity, now I wait for a market structure shift after taking liquidity. If the market structure shifts, then I start selling. Teach us confirmation entry. That's not we're not going to talking about that now. At least not in this class. Maybe the next class. Lord Dido, do you understand? So if I'm in an uptrend, I wait for a liquidity sweep on a higher time frame. So if find is expanding, the market is always moving towards a direction, towards a specific direction. The market always moves with target. The market is not just buying, the market is going somewhere. You get, so if the market is going somewhere, I will trade and follow that market to where it's going. So when it get there, it will reverse and go to another way. So following the trend means you are moving with the market to where it's going to. If the market is moving, it's usually moving. The market is just buying randomly. It's usually moving towards a specific target. It has a specific target that it's moving to. Until the market gets there, the trend is not going to change unless there's one crazy news, one crazy event in the world and everything, or there's a sudden war or something. But if the market is going toward the direction, it's not going to change trend until it get there. So when I identify where the market is going, and the market is usually targeting at the same previous highs and previous lows, swing highs and swing lows on the higher time frame, on the lower time frame. That's how the market works. So when I identify where the market is going, now I mark that high out, and when market gets there, I will wait for the market to show me a sign that it wants to now retrace back and balance price action. And that sign is a market structure shift. Once I have a market structure shift, I know that the market is now going to balance price action. So I will use my fib, mark out my fib to determine the premium and discount area of this particular move up. So once I determine the premium and discount area, I will start selling till we get to the discount area. And when we get to the discount area, I will still be selling till I see a market structure shift back up. You get, so once price get to the direction that it's going to, you wait for a market structure shift. Market structure shift is an indicating that price is about to reverse from where it's going to. Is that understood? market structure shift. You don't know what a market structure shift is? So let's get to the prop firm. This in the topic for the prop firm. So most prop firms offer you like a drawdown of 8%, right? So let's say you have 8% drawdown. How do we do this? 8% drawdown and 5% profit. Okay, first stage is actually 8% also, right? First stage is actually 8% profit. So in this scenario, what I do is that on the first stage, like that's the first stage of my trade. Listen, if I buy a new prop firm now, let's say I'm trying to pass a new prop firm right now. I normally pass prop firm within 2 or 3 days. Like three days is the highest time that I give myself to buy. If I do not pass that prop firm, then I've lost it. First of all, you should understand the psychology behind passing prop firm. You should always have money to buy another prop firm, and you should always be ready to lose that prop firm account. If you buy a prop firm challenge with the mindset of you are going to trade this and withdraw from it, you've already lost that prop firm, you get. So you should always have, and that's why trading is not something that you would do without having a source of income that is actually financing your life. If you are entering trading with the sole idea of making money from trading to balance your life, it's going to be very, very difficult. Like you're not, you the odds of you not making it is very, very high. So when you buy a prop from challenge, the moment you buy it, you already accept that this prop from is not compulsory for you to pass this. So you have a systematic approach that you approach it. So on my first stage, which is the phase one, my risk per trade is 1%. 1% risk per trade. That's what I do. 1% risk per trade. And 3 risk to reward ratio. So targeting, you all know that like the minimum I do is 3 risk to reward ratio. That's like 3 risk to reward ratio. Minimum of 3 are. Are you guys following? Okay, so all you need is 1 risk per trade, a minimum of 3 R. So inside that 1 risk per trade, if you follow your trade correctly, all you need is just 3 wins. It won't even be up to 3 wins before you pass your challenge. You get, and before you lose that challenge, you need to have 8 losses in a row. So I don't see a reason why you are going to have 8 losses. If you are losing, if you have like 8 losses in a row, that means you are not ready. You don't have the skill set to pass the challenge, right? You should stop trading and try and learn more before you come back. You get, you don't buy another challenge trade up. Once you have 8 losses in a row without a win or anything, you should take a step off trading. Try and do some analysis and backtesting, like what you are doing wrong and everything before you come back. Don't just buy a challenge trade up. You get, so you should, all you need to do is just have 3 wins. It might be consecutive, it might not be consecutive, but all you need to do is have 3 wins. You can have in a week, you can have, if you have a week where you have 3 wins, 2 losses, you have passed the challenge. You have passed the challenge. If you have a week when you have 3 wins, 3 losses, you are up like 6%. So the next week you are going to pass it. So and in a week, you should be ready to lose a challenge in a week. If you buy a prop firm ending into this week right now, you are taking 8 trades, and if you lose all that 8 trades during the week, the account is gone. There's no decreasing the risk or anything. If you've lost 5 trades in a row, there's nothing like I'm decreasing the risk. No, you are still sticking to that 1% risk, and if you lose all the 8 trades, the account is gone. There's nothing like, okay, I've lost 6 trade now. Now I want to decrease the risk back to risking 0.5%. No. At the stage one, which is the first stage, stick to your 1% risk. You are risking 1%. So if it's a $5,000 account, you are risking $50. If it's a $50,000 account, you are risking $500 per trade. And the minimum risk to reward ratio is 3 risk to reward ratio. So that's what you stick to. So that's the first stage. That's phase one. That's how to pass the phase one. And phase two, because psychologically phase two is more like, now when you pass phase one, there's always this adrenaline that comes in. Now you have an attachment to that account. So because there's an attachment to this in that account, what I do in my phase is I decrease my risks. So the 1% trade is giving me 8 trades. So I will decrease it to 0.8%. So now I have 10 trades. So if I'm trading on a $5,000 account, now instead of risking $50, I'm risking $40. You get? So that $40 is going to give me more trades than the previous stage. You get? So it's 0.8 per trade, and also minimum of 3R. So that's how I go about the second phase. Are you guys following? Okay, so here we have a maximum of 10 trades, and here we have a maximum of 8 trades. So that's what we have in phase one. We have 1% risk to 1% risk per trade. That's 8 trades. And phase two, we have 0.8 risk per trade, maximum of 10 trades, because there's a more psychological battle that comes into the phase two than phase one. Phase one is still you are still not you still have the mindset of losing. You still want to take risks, but when it comes to phase two, you'll be like, okay, since I've passed phase one, now I'm closer to getting funded than this thing. Phase two is where a lot of people usually fucked up and try to chase profit. Okay, now the phase one will give them the courage that okay, they can do it. And phase two, now they are not waiting for a setup again. Now they are just trying to pass it, and that's where most people actually lose. Even me, it took me a while for me to get out of these phases. So the phase three now is now the funded stage. So when you are funded, this is now where you are now trading with live capital. So you need to give yourself room. So what I do in this trade is I decrease my risk to 0.5 per trade. 0.5. So on a $5,000 account, I'll be risking $25 per trade. That's what I'll be risking per trade, $25. 0.5 risk per trade. So it will give me a maximum. This thing, okay, it's also minimum of 3R. But there is you are allowed to take profit. You are allowed to close your trade when you are up like 2%. When you're up like when you have a 2R win on a live account, because you need to secure profit. You are allowed. Use Maven. I'm funded with Maven, so use Maven. So and I've gotten some withdrawals too, so it's good. So you are allowed to take, if you have a trade running, and instead of sticking to that rule of minimum of 3 hours per trade, because this is now a live funded account. If you are up 2 hours and you don't feel good about the trade, instead of setting break even, it's advisable for you to take that profit and just call it a day and pay yourself and call it a day. So let's say you are risking 0.25 0.5% per trade and you want to make $75. Now you are up $50, and that's the stage where most people usually bring their stop to break even. So if you feel like this trade is not going well, it's not going to go well, or you are not comfortable with what price is doing that right, when you're up $50, just take that $50 and leave, instead of setting your stop to break even and price will eventually come and stop you and break even and still go to your direction. No, take your $50 and leave. That is the funded stage. You are allowed to do that on your funded stage. You're allowed to secure profit on your funded stage. You get, and that 0.5 is going to give you a maximum of 16 trades. So you need to lose 16 trades. So you need to lose 16 trades before you blow the account. So is this process understood? Phase one, 1% risk per trade. Please, can you explain? Explain what? Okay, so phase one, you risk 1% per trade. You have 8 trades till you blow that account. You need to lose back to back for 8 trades till you blow that account. When you get to phase two, because phase two is more psychologically than phase two is more psychological than this thing than phase one, you're allowed to reach 0.8% per trade. You reach 0.8% per trade, and it's going to give you a maximum of 10 trades. And when it gets to the funded stage, that's when you decrease your risk into half. Then you are risking 0.5% per trade, giving you the maximum of 16 trades. So this is the approach that I take, and I pass my perform easily, and I'm able to secure withdrawals. You get. So that's it. Maven rules. Like if you want Maven rules, you go to their website and you see, you read the rules. But the rules is very very good. The rules is very very good. To make a capital investment before I can trade on phase one, do I need to make a capital investment? No, you just need to like buy the challenge. That's just it. Buy the challenge. I think there are $5,000 challenges, about $30, oh, about $19 to $20. That's it. So you just buy it. Once you buy it, you don't need to make any investments. Just trade the phase one. When you are done with phase one, you trade phase two. When you're done with phase two, you get to the funded stage, and when you are funded, you'll be verified. They'll send you some document to verify your this in just KYC. And after that, when you make profit, you withdraw, and their withdrawal process is like every 10 days, every 10 trading days. So if you withdraw now, your next withdrawal needs to happen every 10 trading days. So that's 2 weeks. That's when you withdraw. That's just it. Yes. So any question on this, and this thing, and the premium and discount, before we call it a day, because that's all we are going to be talking about today. That's all we are going to be talking about. The premium and discount. Someone said confirmation. I've thought confirmation a lot of time. So confirmation is going to be next time, not this time particularly. Confirmation is going to be next time, not this time. And someone said something about market structure shifts. Check my YouTube. I have a video on market structure shifts. You see the market structure shift video there, so you can watch it. And any question that you have about that, drop it in the comment of that video. I'll see it and I'll try to work something out. If there are no questions, then it's going to be time that we end this live, because I need to prepare some videos for next week before we get into next week. So any question today? We spoke about two things: risk management and approach to passing program, and the second one is premium and discount. So what are your questions about those two things? No questions. All right then. So this is going to be the end of the lectures for today, and yeah, see you guys next time. Peace. So this video is saved on the YouTube, so you can always come back and watch it. I'm going to rename it to premium and discount with risk management, so it will be easy for you to spot that way. So yeah, see you guys next week, same time, and yeah, see you guys later when we start streaming for trading.